He's joining us this morning. He's the Chief Market Strategist at Blue Line Capital. And, well, Phil, good morning to you. Your initial thoughts here on the CPI, kind of in line with the trend that we've been seeing, nothing to get too worked up about.
Well, I mean, we did see the U.S. equities like the S&P just popped about 13, 14 points. Gold's up about $3 since that number coming out. I think that this number is a little bit on the low end of things. I think that the next quarter, you're going to see blowaway expectations. So year over year, we could be over 3%. And I believe that the month over month data is going to show substantial increases. I mean, look at all of the, look at all the inflation data that we're seeing. Gasoline futures, I mean, over the last half year, up 85%. Crude oil futures up over 50%. So this is going to bake its way into the cake. I think that it's still in the oven, though, and I think that cake will be ready next quarter.
Phil, your point being here, you think that we're going to start to see inflation become more of a concern here, more of an issue, something more to reckon with, so to say?
Oh, it's going to be huge. And I mean, it's going to come really big, especially in that next quarter.
Maybe that's what rates are kind of telling us here. We got to look at the CPI. Again, I just want to point out, nothing to be too concerned about at this point. Then a lot of people are kind of in the camp in terms of what Phil was just talking about as far as expectations that we will see some in the very near future. Month over month, though, CPI year over year, as you can see, in line with expectations. It does look like the core month over month and year over year actually came in a little bit below expectations, slightly higher for the month over month than last month. But again, nothing to get too concerned about. You know, a lot of focus on rates this week. We were talking about it quite a bit here throughout the morning, and we've also been discussing the impact that that has on commodities and some of the trends we've been seeing. One thing we haven't really got to touch on too much in terms of what's headed our way this week and kind of feeds into this inflation narrative is central bank activity. We've got the Bank of Canada today, also with the ECB two-day meeting beginning today. The ECB is going to announce tomorrow. We'll get the Fed FOMC next week, Tuesday, Wednesday. But Phil, your thoughts in terms of expectations? I think for the most part, I'm hearing Bank of Canada in line again with the trends that we've been seeing, expected to kind of stay pat.
Yeah, the Canadian dollar is going to fantastic from a trading vehicle, and we believe that the Canadian dollar is going to continue to appreciate. Commodity-based currency, and remember, we were just talking about inflation. You look at the prices of any commodity that's out there, just about anything but gold has been double digits over the last, half year, quarter. They've all been skyrocketing, and I think that they're going to continue to go. Look at the agricultural markets, everything else. That's why CPI, it's a lagging indicator. So the next CPI, you're going to see that base effect go in. The Canadian dollar, like I said, Australian dollar, those have been great commodity currencies to play. We believe that the euro currency is going to come back, and the dollar index, just because it crossed over a moving average doesn't mean anything substantial has changed. We believe that the dollar index is going to go down and retest those lows.
Yeah, I actually just want to real quick pull up those charts here because I want to get a bit of a visual for what Phil was just speaking to in some of the terms of some of the strength we've seen in the 6A and the 6N. Here they are side by side, the Aussie on the left, New Zealand dollar on the right. And Phil, the ECB, I'm keep looking at some of the economic data that we've been getting out of Europe, and it does seem to be improving a little bit, but they were going through a period there where it was looking like economic conditions were worsening more than anything, it seemed like. But, again, with the vaccines, I guess there's some optimism right now, but expectations here for the euro, any thoughts? I mean, where have you been seeing here? It does seem like it's been coming off those highs recently.
Okay, so when you go over, you're going to have, you've got a conglomerate of a lot of different countries, and for rolling out vaccines and things like that, you just have so many more people in such a larger be difficult. They'll be a lagger, so they'll have hotter economic data close sort of the back half year. You look at Greece, I mean, month over month on their stock market up 10%. Mm-hmm. So it tells you that there is a rate of change that's going on. They are going to come out of this, but like I said, it's going to be closer in the back half. I think that's where the euro currency really accelerates against the dollar.
Let's talk a little bit about the U.S. dollar here in terms of expectations. You think, again, you said that the euro currency could accelerate against the U.S. dollar. What are your thoughts here as we move into the end of the month here and the tie that we've seen in terms of rates and the U.S. dollar, something that we haven't really seen so much in the past years? Again, with your expectations that we'll see inflation run away in the very near future, in theory, do you expect rates to continue to raise and ultimately the dollar to track along with?
So 1718 on the 10-year note, I think is not out of the question at all.
Okay.
And I think it's something that's going to come. The dollar index, the only reason why the dollar's been rallying is because the Swiss franc and the Japanese yen, your two safety plays, have been selling off aggressively. They've been in crash mode. That's why the dollar's rallying. As soon as those stabilize, and they'll stabilize once the U.S. The stock indices start to roll over, like the S&P should run back into resistance here, like 3,900, 3,919. That would be the high end of the range for us. We would be taking off some of that long exposure and actually looking at, tactical short plays just for a day or two. We believe that those safety currencies will get the bounce. All your commodity currencies are going to hold back because of rising inflation. And that's where the dollar rolls over. I think a realistic target on the downside, the dollar 89.75.
Noted. 89.16, the current low right now from, let me just check the date on that. It was earlier this year, I remember. We're talking, I think it was the 6th of January, it looks like. Let's talk Bitcoin. It's starting to work its way up again. I notice a bit of a bid coming back into play here as we get set for the open this morning.
Yeah, Bitcoin is, I really think it's a trading vehicle. I don't look at it as a currency because a currency can't crash 20% unless you're in South Africa or Venezuela. Then it's a normal occurrence. So definitely not a currency, more of this asset commodity trading vehicle that you use. And I like selling some above that 56 to 58,000 level. I like buying it back below 50,000. I think it's a trading range. What's getting a lot of interest is they launched the futures on Ethereum. So we've got a lot of people that are kind of coming in there. They're looking at it as like it's almost the relationship between gold and silver. I think it's the poor man's Bitcoin.